Alright guys, so here in this video, I want to go over some incredibly bullish news that we are getting coming from the box office numbers, but at the same time, I want to talk about how this week you could potentially see a pretty substantial Gamma Squeeze. Yes, it's been a while since we talked about Gamma Squeezes. It's been a while since we had 350-ish thousand contracts on the call side that are out of the money, and 120,000 puts that are in the money. If you guys are confused why I'm saying puts that are in the money and why that is so incredibly exciting, then you guys want to stay tuned. We might actually have a catalyst here to rally, and that is also very, very exciting. So we're going to break down the option chain because this $13 strike to the put side looks very, very interesting, and basically all of these expirations have a lot of open interest. Some of them are going to be more crucial than others, and that's what we need to get into here in this video. So without any further ado, we're not going to waste any of your time. We're going to keep this video short, sweet, straight to the point. If you guys find value out of it, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Come join us on the live stream 10 p.m. to 11 p.m. Eastern Standard Time. We will be live Sunday night through Thursday night, every single night at those times. So if your question does not get answered in the comment section, come join us. Great place to be. It is, after all, free 99. And you know what else is free 99? Getting your free stocks with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the pinned comment. It's time, baby. It's time to go. It's time to make these trades. It's time to make that money, and that is what we are doing. So first things first. Let's talk about the good news, but also the max pain. So the max pain, when you add all of this option activity, puts, calls, all of that, the max pain for this week is $18 per share. The max pain for last week was $13 per share. So there is a substantial difference for this week, and it's obviously due to all of the contracts that we do have on the option chain. And we're going to talk about that in 1 second, but I do want to talk about this first, because I think this could be a bullish catalyst that could, send AMC stock in the right direction. After all, it is one of the top headlines on CNBC as of right now. Box office is, doing well. So this actually came out 3 hours ago. It says Jurassic World Dominion nabs 143.3 million in domestic opening. Top Gun Maverick adds 50 million. The key points: Jurassic World Dominion roared to the top of the box office over the weekend, generating more than 143 million in ticket sales during its debut. Around 10.8 million moviegoers turned up to see Dominion domestically, representing around 66% of the overall moviegoing audience during the weekend, according to data from Intelligence. And I think this is substantial, not just because the numbers and the consistent, box office hits that we are seeing, which is very, very good and encouraging. It looks like Jurassic World Dominion will be another big hit, and this is what we have been waiting for. But 66% of the overall moviegoing audience was in the United States, and where is AMC mostly based? In the United States. AMC by far has the largest market share by like 2 times its other competitors, right? So AMC is definitely the most primed to benefit from this, and I think ultimately that's probably what we're going to see represented in the share price of AMC this week. But it says Top Gun Maverick, which snarled another 50 million in ticket sales during its third weekend in the US and Canada, represented 26% of the domestic movie going audience. So very, very good to see right here. It says internally the film has secured around 245.8 million since opening earlier this month, bringing its global tally to just under 390 million. So very, very good numbers that we're seeing. Could be that bullish catalyst that we need, because after all, when there's a lot of uncertainty what's going on in the economy, it can negatively affect AMC's share price. You could see a lot of shorts, you could see a lot of put activity like we have seen and like we've talked about from the Ortex data. Look at the option activity over the past week. It's 10% positive. 123 orders totaling $27 million. It's very, very negative overall. So when you're getting that uncertainties, that's what you tend to see, is a lot of negativity, a lot of bearish calls on the markets. But when you start to get proven wrong, essentially, that, hey, AMC, people are going to theaters, people are going out to do things, the fundamental valuation can be supported here, because after all, the market cap of AMC sitting at about $6.42 billion. Well, their average revenue before, COVID hit and all that was about $5.5 billion. So that would be a price to sales ratio of a little bit over 1. And that's not too terrible considering the growth that AMC could possibly see over the next coming years with their initiatives like popcorn, credit cards, so on and so forth. So hopefully that makes a little bit of sense why it's such a big deal. We also do have the Fed rate decision. That Fed meeting is on Wednesday. That's going to throw a wrench into potentially what we could see as far as a gamma squeeze. It could amplify a potential gamma squeeze, or it could really give us that gamma squeeze after the Fed meeting. Possibly end of the day Wednesday like we seen last time around. Possibly Thursday and Friday could also be very big days, but I'm not going to rule out a potential rally throughout the whole week. I'm not going to rule out potentially something like Redbox happening where you just rally for no reason, even if the markets are down in the toilets. Now, what we're seeing for the total number of options for the call side, about 7,100 calls that are in the money, 327,000 calls that are out of the money. This is a very substantial number. This would represent about 32.7 million shares that would have to be bought by market makers if all of these options went into the money. Let's not be overly dramatic here. They're not all going to run into the money, but what is even half of 327,000 calls worth of shares, right? That would be about 16 million shares that potentially market makers would have to buy if even half of these options went into the money. And that's substantial. That's, half of the daily volume roughly that we have seen every single day over the past week in AMC stock. But look at the put side. So essentially, if you guys don't know, the short interest is only sitting now, it's estimated at about 22.44%. We obviously know it's much higher than that, but why the stock price has actually been falling so much and the short interest is, really not going up, let's call it that. It was estimated at 24%, revised down to 22.44%, but the share price has been falling every single day. We know these numbers are bullshit, but bear with me here. When there is a lot of these short-term puts that are being placed close to the money on AMC stock, well, it forces market makers to go out and short stock, and that's like a self-fulfilling prophecy. Just like a gamma squeeze, when people start to buy calls that are close to the money, the stock price starts to go up. It somewhat creates that gamma squeeze, right? Pretty self-explanatory. I'm sure everyone knows the gamma squeeze part to the upside, but also to the puts, right? It causes that short-term downside pressure. But when the stock starts to go up, it could actually add a lot of potential buying power as the market makers really get rid of a lot of those short positions by buying them back on the open markets. That's why I'm so excited specifically about these puts that are in the money and where they look on the actual option chain. So if we go ahead and look at the option chain for this week and look at the put side, you can see that the $13 strike has the most for open interest on the whole entire put option chain, right? The $13 strike has about 22,000 puts that are currently in the money. That represents about 2.2 million shares that would have to be bought by the market makers if AMC stock can break above $13 per share. If we could do that by the end of the week, that's substantial. 2.2 million shares, you guys might not think that's substantial, but especially if it can happen fast at the same time, you have 3,500 calls that are going into the money at the $12.50 strike and 9,300 calls that are going into the money at the $13 strike. That's a lot. That's a lot. That's potentially over 4 million shares that would have to be bought by the market makers if AMC stock can just break above 13. Now on the put side, the $14 strike, you're looking at 4,300 for open interest. At the $15 strike, you're looking at about 4,500 for open interest, and at the $16 strike, you are looking at about 12,500 for open interest. So I do think it is very, very encouraging what we are seeing on the put side, and obviously not only on the call side. On the call side, it does look much better as far as, it's not spaced out with the open interest, right? Like on the put side, the $13 strike has a lot of open interest. The $13.50 has virtually none. The 14 has a lot. $14.50 virtually none. 15 has a lot. $15.50 virtually none. What you're seeing on the actual call side is something much different. You're actually seeing the $12.50 strike, 3,500, $13 strike, 9,300, $13.50, 3,700, $14 strike, 9,100, $15 strike, 36,000. Sorry guys, apologize. But yeah, pretty much all the way down the option chain, you're looking at a lot of activity. And then you look at the $20 strike right here, 36,000 for open interest. These contracts are $10 a piece. So if AMC could make a big move, then market makers would essentially have to hedge out a lot of shares right after 20. Like if you bought these options, you would break even on these options at $20.10. If that happens, you would see a gamma squeeze. I'm not sure. I'm not a fortune teller. Don't know if that is exactly going to happen. But if you basically count up how many millions of shares market makers would have to buy, it's quite incredible, right? You get about 1.8 million right there, about 267,000, about 900,000, about 370,000, about a million, about 350,000. All in all, if you include the $20 strike, you're looking at over 10 million shares the market makers would have to buy just on the call side. If you're looking at the put side, you're looking at another 2 million, half million, that's 3 million. You're looking at 4 million, 4.2 million. You're looking at a lot, guys. To the $20 strike, you're looking at roughly another 6 to 7 million shares on the put side. So when you add that together, that's almost a decent day's worth of volume alone, if AMC stock can just make it close to about $20 per share. Obviously, I'm not a fortune teller, but I do think somewhat of a gamma squeeze could get kicked off if we could just break above 13. And then also on top of that, given how cheap the premiums actually are, even out to July 15th, if AMC stock did move up substantially, say went close to 20, you would see a substantial gamma squeeze because of the July 15th expiration as well. Look at these $20 strikes for July 15th, $57 a piece. You're looking at 31,000 for open interest. That's a lot. That's a lot with a very low break even. So if the stock were to go over $20.57 per share, you would also see a lot of these contracts that would have to be hedged out for. So I think it's very exciting, not only for this week, but potentially you could see a multiple expiration gamma squeeze, call it that. Usually you don't see that. Usually it's one expiration that causes a gamma squeeze, but in this case it could actually be the next couple of option expirations that could give us that gamma squeeze. And like I said, the max pain is sitting at $18 per share by the end of this week, so that would obviously be very encouraging as well. And if we do go ahead and take a look at the July 15th number of calls, let's go ahead and refresh this. July 15th, 376,000 calls that are out of money, 8,400 calls that are currently in the money, and then you do have 78,000 puts that are currently in the money. So I do think this is the best time period in a very, very, very long time that you could see a gamma squeeze. I was going to say expect a gamma squeeze, but in this market environment, you can't really expect anything. But I do think it's more probable than not, given what we're seeing with AMC stocks, given what we're seeing with, these runners. There's still FOMO out in the markets. Look at Redbox. That thing went parabolic and will likely continue to do so, and could actually prop up AMC stock at some point as well and help trigger a potential gamma squeeze. So these are only my thoughts. Obviously, it's not a recommendation. I'm not a fortune teller, but the data is definitely here to suggest we could see a gamma squeeze. That's 100% true. No matter who you are, no matter if you think it could happen, no matter if you think it won't happen, the data is here to support it. So that's the facts, and that's the truth, and that's what I wanted to bring to you guys here in this video and break it down a little bit more and give you guys the context around some of these actual numbers. So thank you guys for watching. Let me know your thoughts. Are we going to see a gamma squeeze? What would be your levels that you would watch for? I personally think 13, 15, and then $20 per share are the key levels. Break out above 13, you're going to 15. Break out above 15, you're going to 20. Simple as that. So thank you guys for watching. Get your free stock down below in the description. Come trade with me live in real time. Link down below in the pinned comment. Thank you for watching, and I will see you hopefully later on tonight. But if I do not, I will see you tomorrow.